Welcome to Tuesday, 30th of June 2009 and the RANsquawk EU morning briefing. So just taking a quick look around the markets, just gone 8:30 now in London. First of all, starting in Asia, we did see released the Japanese jobless rate did rise to a 5.5-year high in May. Job availability sank to a record low, but government stimulus efforts prompted a modest rise in household spending. Has reinforced forecasted economy will return to growth in the current quarter. Consequently as well, we did see the Nikkei rise some 1.8%, and that did finish the April-June quarter up some 23%. That's the biggest quarterly gain we've seen since July set period of 1995. Again, being buoyed by these growing green shoots, the growing hopes that the worst of the economic crisis may be over. In terms of other specific news flow to come out in the overnight session, a couple of pieces out of the US Treasury Secretary Timothy Geithner saying that the US economy shows signs of emerging from its slump and that financial markets are stabilising, so pretty much continuing his rhetoric we've heard over the last 2 or 3 weeks. But elsewhere, PIMCO's RAN, obviously closely followed in the US, he said that the Federal Reserve is unlikely to raise rates. And also an article in the Wall Street Journal as we head in towards the second quarter earnings season in the US, looking to kick off with Alcoa on the 7th of July. The Journal reporting that Street to log best quarter since crisis. The securities firms still standing on Wall Street are about to close their most lucrative quarter since the credit crisis erupted, with a strong performance from trading and underwriting. That particular article looking closely at the banks, including Bank of America, JP Morgan and Morgan Stanley. Elsewhere, quick looking commodities, WTI crude futures, we are trading higher this morning. It jumped over 2% overnight. Analysts saying that a sudden spike in Brent buying pinned on fund positioning ushered out the market's best quarterly gain since 1990. And consequently, we are seeing oil and gas sector in Europe the best performing at the moment, and is helping to keep the FTSE CAC and DAX into slight positive territory in early trade. Looking elsewhere, just a quick summary in the UK markets. We've seen cable already trading and touching a session high at 167.46 this morning. Chiefly buoyed by some further improvements in the housing markets. The nationwide house price numbers in June and month-on-month came in at plus 0.9%. Analysts were actually looking for a contraction on a monthly basis of a 0.5%. And year-on-year, the contraction now stands at minus 9.3. Analysts were looking for a drop of 10.8. And that does mark the second rise in British house prices according to Nationwide for the second month in a row. And cable did consequently get quite a good lift on that. As well, on the data front, positive coming out of British consumer morale, improved in June to its best in 14 months according to the latest GfK NOP Consumer Confidence Survey, which, although still down quite heavily at minus 25, was in line with expectations, and as mentioned, the best in 14 months. On the flip side though, a couple of downbeat pieces in terms of how the UK is going to recover from this recession. The Telegraph saying that bankers warn of a long road to health for UK financial system, with the Independent warning of Britain faces a new recession and a possible relapse into a dreaded double-dip downturn. They point to the Bank of England lending survey, where we saw credit conditions still very much tight in the UK markets. That was about 2 weeks ago since that was released, still getting some attention by economists, as well as the aspiring public borrowing that we're constantly seeing. In terms of UK data, we'll be looking out for the GDP Q1 final figures. Analysts are expecting a slight revision today to a minus 2.1% print from the minus 1.9% previous. And then that'll lead us on to 10 o'clock. We'll be eyeing the Eurozone CPI estimates. Analysts are actually looking for a negative contraction in inflation in the Eurozone for June, in its CPI reading at minus 0.2% from the previous month's flat. And then the main figures out of the US today, we'll be looking out for any more further improvement in the form of Chicago PMI numbers, as due at 245 London, and then US consumer confidence is also expected to have risen above 55 according to analyst consensus on Bloomberg.